Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today our guest is Bob Fraser. Thanks for being on the show, Bob.
It's fun to be here with you.
Yeah, I'm excited about this conversation just from a little bit what Bob and I have talked about beforehand, but a little about Bob in case you haven't heard of him before. He's on a mission to help investors take advantage of one of the most effective and overlooked avenues in real estate investing, residential mortgage notes. As founder and principal of Aspen Funds, Bob has purchased more than 1,000 mortgage notes, earning double-digit annual returns without the risk of traditional investing options. So, Bob, thank you again for your time. I appreciate your just sharing your expertise. But give us a little more about who you are, and let's dive in.
Well, sure. I'm actually not a real estate guy by background. I was a computer scientist and engineer, so which actually is a great training for a lot of things. But I ended up in the 90s, started a tech company and raised $40 million in venture capital, became one of the fastest growing businesses in the Midwest region of the United States, and ended up winning the Ernst & Young Entrepreneur of the Year Award, 300 employees. It just blew up. Well, I kind of got an MBA in syndication and, finance, and became a finance guy after that. Really loved finance. And so started structuring deals, ended up, helping nonprofits raise money, also, syndicating good works, so to speak, right? And started a hedge fund, and then 8 years ago joined up with my partner and started these note businesses, investing in notes. So pretty much focusing on operations and finance, deal structuring, and using other people's money to make money.
Yeah, well, it's an incredible track how you've got where you're at now. It's like you didn't anticipate, I don't think, many years ago when you were a computer scientist.
No, I was writing code.
Wow. And raised over $40 million in venture capital. And then, now you've helped many organizations raise money.
Yeah, there's so many different kinds of money, and this is one of the things that, business schools really don't necessarily do a good job teaching you how to raise money, what are the different kinds of money, how to make the pitch, how to attract investors, what they're looking for, how to keep them happy. It's something it's important to be good at it if you're trying to syndicate.
Well, you brought up a great point there, and I wanted to tell listeners too. Bob has done numerous syndications. They've operated in numerous funds.
We have 6 funds today.
Yeah, 6 funds right now.
Just in our current business.
Awesome. Well, I'd love to dive into, you've talked about how, what are investors looking for and how to keep them happy, and how you've been so successful, in this side of the business but get us started, how do you talked about different kinds of money and the importance of knowing what they're looking for. Help us to better understand.
Well, so when we started, when I started venture capital, of course, you start with friends and family. That's the easy money, and and that's so-called dumb money, which dumb money is great money, and it doesn't mean they're dumb. It just means they're not necessarily professional investors. But when we started our current fund, so my partner came to me, and he's kind of our chief investment officer. He's the genius brain behind our strategies. I'm really the money and scale guy. And so he came to me and said, we got this model. Here's this crazy model. I'm like, okay, tell me about it. And I'm listening to him going, this is too good to be true, but let me take a shot. So I let him invest my IRA for 6 months. And I'm like, holy smokes, this is real. And so the next thing I did is I just went and raised a little tiny beta test fund. And that's with friends and family. So people that I didn't have to do a lot of explaining, people that I had a lot of credibility with, and explain the model to them. Explain the risks to them. So, these are my friends. So you really want to treat them well, and you want to go after the people where the risk fits the person. You want
Right.
the investment to fit their profile. So I tried to do that. Little tiny fund. Well, then we did super well, made our investors a lot of money. And then you're off to the races. The key really is track record, and start small. It's okay to start with small deals. And then the most important thing is to treat your investors well, right? I mean, just, treat them like you'd want to be treated. Take care of their money. Treat their money as super important. Communicate with them, right? No surprises. First rule of management: don't surprise your investors. Right? Just be boring, send them money, do what you say. And at the end of the day, they leave with a really good feeling if you never call with bad news, and you do what you say. So that's the key. And then track record is everything. When you get a track record right now, we've been doing this we're in our 8th year now, same 2 strategies. And, you show the charts of our returns, and all of a sudden investors just get really, really comfortable. And when you get to our size now, we're getting, we're getting an audit done now. We're getting institutional capital at this point. So now we've graduated from friends and family to really extended, friends of friends, and now we're getting institutional capital, and it's all because of a track record. So we start with one kind of money, and we move on to other kinds of money. And started with small checks. Now we're getting bigger checks, and all along the line, you just have to deploy it. You have to, dot your I's and cross your T's. And, we're very, I'm a computer scientist, so I'm super analytical. We do incredible amounts of analytics. We very cards face up. I play my cards face up. If I'm a poker player, no surprises my investors. I disclose everything. We write a quarterly newsletter that has all the good, the bad, and the ugly. So it gives investors confidence that, they know, people know unexpected things happen,
Sure.
And what they don't want to do is feel like you're hiding or you're not disclosing. So we disclose everything, and end of the day, we send them checks, on time, and try to do what we say and meet the we don't overpromise. So it's all about track record and doing what you say, execution.
Yeah, you laid out so many important things there. The no surprises, communication. I love you said be boring.
Absolutely.
Like, be boring. I think that's an interesting way to put it. It's like, and it goes back to no surprises, but and the track record, and it is so important. And most investors I talk to, when we talk about track record, or they ask me about different things, obviously, but when you're just getting started, it's difficult, to have any kind of track record, to build that rapport with investors, especially if they're asking about your track record and you don't have much. How do you suggest somebody kind of navigates that conversation? I mean, obviously you want to be honest. You want to say, this is my first deal, my second deal, whatever it may be. But, how have you navigated or recommended other people to kind of navigate when you're
I think you do have to be honest. You have to say, this is my first deal. With my beta test fund, I mean, I literally said, it looks incredible. We've never done this. And I went after the people who are okay with that. There's high risk profile people who like, mom says, oh, you never make a mistake, so mom, put in some money, so it's those kind of people that's, oh, I'm with you, whatever you want, so, but you do disclose, this is, this is untested. We think it looks good. We've done our homework, and my partner was super articulate and intelligent, and really could talk to anybody that had the issues and really answer them well, but we didn't know. And so it's so important to be honest. You don't want to oversell. I'd rather undersell and over deliver than oversell and tell people there's no risk, which is illegal, by the way. You get thrown in jail if you do things like that. I find so many people that raise money don't do it legally. And, you really need to pay attention to the laws and know what you're doing and know what you can and can't say. I would definitely recommend getting a lawyer, getting advised on what you can't say. And if you're under the Reg D exemptions, you have to be very careful what you say. There's no guarantees. You need to disclose the risk. But But so you start with those first deals. It's just start small. Start with a deal, $250,000 deal, or start small, but then execute. And there is a point I even made my initial structure so investor friendly that even, if it's open-ended fund, if the value went down, I make a percentage of profits. Well, the value went down and then back up the next quarter, I would make a lot of money. I literally changed my PPM on the fly when I realized it was going to happen to undo that so that I wouldn't make the money. And I sent out my investors, hey, I'm only going to make the money if the share price increases over 12 months, not over one quarter. And because I realized that I made a goof. And so investors all of a sudden feel like, well, gosh, I'm taking care of them. I'm looking out for them, which I am. Another time I couldn't, there was, the profits were thin enough as we were getting early, started. We had high expenses out of the gate, and there wasn't enough money for us to pay our AUM fee. Well, I waived our AUM fee. I'm not going to take the money. I'm prioritizing my investors. I treat my investors, like they're my mom and dad. I'm going to really take care of them. And so people feel that comfort from me. I'm going to do everything I can to make sure they get paid and take care of their money. And, because, they're trusting us. They're, a passive investor. Think about it. I mean, it's all about trust, isn't it? They're trusting you to make their decisions and take care of them. Well, then that's a huge responsibility. So you just got to treat it like that. Treat your investors super well. That comes across. And then what happens is people start throwing money at all your deals because they know, they trust you.
Right.
You take care of them. And we work so hard to never violate that trust. And even when it hurts us, we've run into situations where we needed some short-term funding, we just for a rehab or something, and didn't have the cash. Well, we personally loan the fund money at, below market rates, just
right.
Because we're not trying to just make a dime for ourselves. We're trying to make our investors happy. And I really treat them above ourselves. Right. And that's, we're in this to make our own money as well. I mean, I'm not, this is a for-profit business, but you just got to treat your investors like gold.
Right.
And then they keep coming back.
Are there any like special techniques that you use as far as even just in communication with investors that you've seen has been very fruitful, or something that they, we had talked about, being able to raise money, but wanting investors to want to keep investing with you? Any other ways that you've been able to do that?
It's like anything, it's marketing, and it's consistency. So we run a quarterly newsletter. And so it's just, we're always in front of them, because literally a lot of investors, they ask all these questions up front, and you think they're going to be super involved. And once they write a check, you never hear from them again. And well, that's good and bad, because now you're out of sight, out of mind. I don't want to be out of mind. I want them to know I'm loving them, and I'm loving their money, and I'm taking care of it. And I want them to know I'm working hard for them. I want them to know I'm chugging it, man. I'm burning the midnight oil. I'm making this. So I do regular communications. We make them look nice. It's we typically do a 1 to 2 page little newsletter with data, charts, facts, and send it out. So we also we've started an annual shareholder event, and just like, Warren Buffett does. Why not? And
Nice.
It's super easy to do an online conference like that, and we, prepare slides, and we've just done a half-a-day event, and I do add value added. I do a whole economic update. One of our passions, having been through 3 crashes. We're allergic to hyper cyclical assets here at Aspen, and but we also pay a lot of attention to the macroeconomic picture. And so I do a whole economics presentation for my shareholders. So I try and really add value to them, and I don't give it out except to them. And so we do that once a year. And so we're trying to provide value, but be in front of them and let them know we're working hard. And then when there's new funds, or new investment opportunities, they're rolling their, opportunity to roll their cash over. Well, you're top of mind.
Nice. No, that's so important. And you've given many great examples of how you all have kept investors top of mind and given them priority just to really build that long-term relationship. It's so important. I love the newsletter idea. And another way, are you sending that through email or
Yeah,
through scale mail?
absolutely. All email. I don't do
Okay.
any, we don't kill trees.
Okay.
No, it's all email. And then, I have an investor relations person who, calls them regularly and just lets them know what's going on if they want to talk. A lot of people don't want to talk, but that's fine. I think another missing element, we're masters of deal structure here. And to make the structure investor friendly. For example, our income fund, one of the ways income funds lie to their investors is you pay preferred returns you can pay not out of profits, but out of capital. So literally I'm sending them a check. They're feeling good about the check, but it's actually taking capital away from the business. It's not, it's a return of capital in addition to profit. Right. You follow me? Well,
yes.
I built into my fund. I can't do that. I can only write a dividend check out of profits alone. So that's honest, right? And I just said that, if my fund changes value down and then goes back up, I don't make money on volatility in my fund, which I could easily have done. So those kind of things, deal structure really, really matters. The other thing we did, we figured out in the note space, these are not big monolithic apartment complexes. There's not one deal. These are thousands of notes. And so while 8% of my portfolio self-liquidates every year, so I have a massive amount of cash flow in this. So I thought, you know what? We could offer the holy grail to our investors of liquidity. So literally, I put a liquidity provisions in. I price my fund on a quarterly basis, and I say, hey, if you want your money back, write me and tell me how much money you want and give me 90 days notice so that I can reserve that capital and I'll pay you back. And so we actually made this deal structure super investor friendly. And yeah, it's a little bit of a pain for us, but so what? Investors love that. And, very few of them take us up on it, but I put it in there. And because the actual asset structure allows me to do that. We did another structure. So we realized we did an open-ended fund with our second strategy. Well, the second strategy is much lumpier strategy. And we figured out we're harming our returns because we're sitting on too much cash. So we're shutting down the open-ended fund and going to a closed-end structure that was much more capital efficient. So one of the keys is structuring your deals to fit the assets, and as much as possible, add investor, make it super investor friendly to the deal structure. Now we want to eliminate any barriers we can, any friction between that person sitting down to write that check and that check hitting my inbox. Just make it super easy. It's investing with Aspen is like floating down a gently flowing river.
That's good. Yeah. So could you just highlight some of the things as far as structuring, the asset in a way that's so much more friendly to the investors, just so we can say, okay, those are some great things.
There's one liquidity. Okay. So, number two, we price our assets. We do actually an asset valuation. We're not trying to hide the investor returns. I mean, sometimes you look at your mutual, you ever buy a mutual fund or invest in, figure out how much money you made last month. You can't do it, so we don't hide that. We make it super easy. Like I said, we make it investor friendly so that we're not taking fees. If they're not making money, we're not making money. We try to make it very much, what's good for the goose is good for the gander. So those kind of things, we make it super investor friendly. Well, and one thing we did with our most recent fund, we figured out a lot of people they want to roll the dice and want to get the high returns. And a lot of people just really don't. They want to make much more steady, much safer. So we actually made two securities out of a single offering. So single asset, single fund has two securities. We have a debt security and we have an equity security. And so the debt security is paid first. It's first money out, but it's a fixed return. So those kind of things. And I allow any number of tell me what you want. So one of the things you want to go to an investor, you want them to say, hey, you don't, do you want A or do you want B? You don't want them to say no. So you give them a choice. Which one fits you better, A or B? Not, hey, how do you like A? And so they choose, and now they're making a choice between one security and another. It's been super well. We've ended up raising about, I think about a third of the fund has come in at debt and 2/3 equity. So
that was going to be my next question. Which have you seen?
Letting investors lead. I'm letting them tell me what they want. And we have, not only that, we have 2 different funds with 2 different strategies. One is a growth fund and one is an income fund to capture the 2 different investor, big investor classes. Well, what are you after? So if you don't like, you're not in that place where you want one, well, you want the other. We're hitting an income fund. We're setting an income fund, let's say, to a young high earner. You're saying, well, I don't really need income right now, just taxes. And says, well, how about growth? You interested in growth? Well, yeah, heck yeah, you got that. Yes. So it's having an, we basically have an inventory of investments that fit, so that I'm not wasting my time. Whenever I sit down with an investor, I've got something that's going to fit them, regardless of where they're at. And generally we do, so that I don't really get a lot of no's, except for other reasons,
Yeah, I love that. I love that, having some options instead of just saying, okay, this is it.
Right.
Like it or not.
So now it's a buffet. Which one looks good versus, hey, I've got smoked egg rolls today. You in the mood? Or,
Right.
no, I don't want, that doesn't look good. Let's get a choice here.
Wow. No, that's some great information there and insight, Bob. And unfortunately, we're running a long time, and we have to skip to some last minute questions. But I did want to ask you. You mentioned like you have another team member, assistant that calls the investors. I wonder like how often is that? Does that person have like a cycle of okay, they need to call all the investors quarterly or annually, or how do you handle that?
We kind of do it once a year, and really it's related to, so they get the normal communication, but we reach out to them and told them about the investor event, the annual shareholder meeting, and say, hey, we just want to personally invite you and tell you about this. So it's more of a personal invitation, and they can either fly down and come into our office and sit with us and meet us face to face, or they can just, click a link and watch. So it's an excuse for a personal touch point. And also if there's, if we're raising a new fund and we're looking for referrals, we will, we'll call people sometime and just ask how it's going, and if they would like to make any referrals, because a lot of people actually, they want to give you referrals. It's back of mind,
right.
So what you're doing, if you just ask, just ask, and most of our investors love us, so they're happy to they're actually feel like they're helping not us, but their friend, and so it's just bringing it front of mind.
That's some great advice right there. We're not, and that's not been talked enough on the show about, just like asking for referrals.
That's right. Just ask.
Yeah. Wow. All right, Bob, a few last questions. What's been the hardest part of the syndication process or business for you?
The hardest part is the cycle. Like I said, I've been through many. And it doesn't matter how good your product is when the market turns. You could be selling free money and people won't invest in that. So the sphincters tighten up. All sphincters tighten when the market crashes. So really, the biggest lesson is make hay while the sun shines. And because when investors' appetite changes, it changes. So you want to make sure your projects are buttoned up and can weather those things. But just that's been the hardest thing, is trying to raise a counter cycle is impossible. Basically, it doesn't matter what you're offering.
So that fits perfectly right in the next question is, how are you preparing for this potential downturn that everybody's talking about?
We've been shifting our portfolio mix into much more safer assets, much more senior assets. And we've strengthened our underwriting to really measure the price to rent ratios, because we know that, rents are not going to necessarily go down. Okay. So we're looking for different metrics that just still shifting portfolio mix is really our key strategy there.
What's a way you've recently improved your business that we could apply to ours?
Yeah. We've fully automated everything with our staff. We use electronic, cloud-based communication systems and CRM systems. I use a program called Microsoft Power BI. It's analytics. I just can't recommend this highly enough. It creates the most amazing charts, but it literally slices and dices your data. We know absolutely everything about our portfolio. I can look at by location, by equity, by return, and just run numbers like crazy. The best decision, you can't make a good decision if you don't have good analytics. And so, and now these analytics, this Microsoft Power BI, it does everything you could possibly imagine, and it's just costs, I don't know, $10 a month or something ridiculous.
Wow.
The amount of value I'm getting from this, and of course, then it creates these beautiful charts for my investors. And it's all live. It's all live data. Well, I've integrated everything. So I use the tools available to you. I've integrated it with my bookkeeping system. I've integrated it with my loan servicing system. I've integrated it with our asset management system. And so it's all live data, and everybody loves it.
So, and it's called Microsoft Power BI?
Power BI, Business Intelligence.
Nice.
Can't recommend it highly enough.
And how does it get the information?
Especially if you're a nerd.
It's just integrated and communicates with those other platforms?
Well, you have to, it's not automatic, but in some cases it is, yes. Mm-hmm.
Okay. Wow. So tell me how you're finding investors right now.
We are continuing to leverage existing relationships. We've got some marketing partners that actually are, so we've actually syndicated with wealth managers. And that's where we're heading now. We're starting to talk to family offices. We're using Google and finding that, and actually, now that's tricky because, but it works. If you do it right, you have to know what you're doing. And, you should talk to my marketing guy if you want to get more on really how to use the internet for fundraising. He's the expert. So my technique is to find the expert.
Yeah, that's a good technique.
and make sure he's happy. So that's what I do.
Nice.
And so we use the internet, referrals, and referral relationships, and then we go to conferences. So it's just being visible.
What's the number one thing that's contributed to your success?
Our track record and execution, no doubt. And even, it's even on the source side. We're now been in the business so long, we are becoming the go-to source for our suppliers, who have these notes, because we're so easy to work with. We do exactly what we say. We're very nice. We want to be nice to people, treat people with respect. And, it's so easy to be an a-hole, and you just don't have to be. And so people want to work with us. And so we have these incredible opportunities, and we get the best deals and the best product, better than everybody else in our industry. And then we treat our investors well too. I mean, it really isn't it? It's the golden rule, right? Treat others like you want to be treated. And that includes your suppliers and in your sources, your investors. Go to the conferences and be a nice guy, talk with everybody. It's just those little things.
Bob, how do you like to give back?
Yeah, well, we actually give a portion of our profits to nonprofits here, and that's our just private information. But we don't publicize that, but it's definitely a part of who we are. I serve on the board of nonprofits, and and help them raise money, which is fun. And because at the end of the day, right, we don't leave the planet with anything,
That's
so
right.
you want to make sure it's everything that as we're doing our fun businesses and we're making money doing it, we want to make sure we're leaving the planet a better place and taking care of others.
Yes. Well, thank you for sharing that, Bob. A great interview. Thank you so much for your time and sharing your expertise so freely with the listeners and myself. And tell them how they can get in touch with you and learn more about you.
Sure. Our website is Aspen Funds, Funds.us, aspenfunds.us. Check us out.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.